Welcome to Regulatory Joe. I'm Joe Boyle, the President of Regulatory Solutions here at Penstock, and today I'm pleased to have Josh Schultz join me, Strategic Engagement Manager at Citizen, a subsidiary of Softheon, to discuss the impact of the election on the ACA. Josh, tell us a little bit more about yourself and Citizen.
I have a background in healthcare going back about 12 years, working with the ACA and Medicaid and other related issues. And I came to Softheon and now with the subsidiary Citizen going on 4 years ago. Citizen is a newly created subsidiary. Well, we're about 6 months old legally, but we've existed since 2017 when we decided to do a diversification due to the presidential election in 16, changing the direction of the ACA, moving into different markets within Softheon. So Citizen is a subsidiary that focuses on both the operation and administration of government ACA marketplaces, as well as Medicaid eligibility and HHS eligibility verification software systems.
That's awesome. I was so excited to see when Softheon launched Citizen because there has always been a need for that niche space of support for the state-based marketplaces and exchanges. And I think it's actually highly relevant that we're talking about this today because we do know that at this point in the year, states release policies and legislation and regulations, every month for all 12 months throughout the year, but most especially in Q4 of each year, we know that there's the very large push for the annual federal guidance that comes out. And I do think that with the election coming up, that we're going to see a little bit of, more of a strengthening of certain policies across different states, understanding certain states lean one way or another, and certain states represent state-based marketplaces or federal marketplaces. Do you think that this year will be unique in the sense that we'll see changes we never have in the past from CMS or different divisions of insurance?
Well, I think that one of the biggest changes could be that depending on who wins the election, either the changes in the annual notice of benefit and payment parameters that everyone has been scrutinizing very closely, which is at the federal level, as we all know, or some of the other changes downstream from that could be either pulled back through the Congressional Review Act, although that's not commonly used, or frozen and then reevaluated because changes, at least at the federal level, made so close to an election, if a different political administration or party comes into power, can be reevaluated and changed. And I think that's something that's adjacent to what you're really talking about here. Could have perhaps a difficult to predict pivot in the regulatory space for health insurers and as well as the government agencies that administer health insurance related programs.
That's a really good point too, and I'm actually glad you brought that up because CMS did release the earliest time ever in the history of the ACA, the earliest notice of benefit payment parameters, the first week of October. So if you look out there, we'll actually see Plan Year 2026 proposed ruling is available for comment, and I believe the comment period is allowing issuers and individuals to produce a comment in a position by the first week of November. I believe it's November 12th. If I'm not mistaken. So I would envision a lot of issuers are scrambling to review and disseminate to see what the proposed rules mean for them for next year. And it's interesting to say, so if the office does change for Plan Year 2026, what the implications would be on issuers thinking about entering new marketplaces, whether it's a state-based marketplace or a federal exchange, or even changing their strategy entirely based on those decisions. I did notice that last year's notice of benefit and payment parameters did have a heavier focus on state-based marketplaces and the impact that issuers had to actually solve. I'd be curious to see if that theme stays the same as we also see states converting to state partnership exchanges and state-based exchanges entirely over the next couple of years. We personally see it becoming a theme, but would love to get your thoughts more on that.
I mean, that's a really, really interesting and involved question and answer, because it could go a lot of different directions. If Kamala Harris wins the election, you could see, I mean, pretty much more and more blue states, states that vote with Democratic politicians, either run their own exchanges, or in the minority circumstances are either the state partnership exchanges, or there's another designation similar to that where they actually even run more of the exchange than a partnership, but basically take on more and more of the functions of the federal exchange to healthcare.gov, that is, or run their own exchange. And this allows them to have more of a hand in kind of operating the insurance markets. And many states, such as California, New Jersey, others, have enacted state-based subsidy programs to help people, buy insurance when their income went above the eligibility limit for ACA subsidies. And now some of those subsidies were supplanted in importance by other legislation, but having the exchange allowed them to do that. I do think that whether or not more states go to these different exchange designations will directly be impacted by who wins the presidential election. And I think that you could see a swing toward state-based exchanges in red states, or states that typically vote with Republican candidates, in the other circumstance if President Trump is reelected.
Thank you. That is a great response. And I would say that with respect to even the control that state-based exchanges have over something like subsidies, we do see that expanded access being a point of contention for Plan Year 26 and 7, with the option, like you mentioned, to either rescind those expanded subsidies or continue them in perpetuity. So it's interesting because when we look at the growth of the ACA marketplace since 2014, we're at an all-time record high of members across the country qualifying for savings. I would have to envision that members are wanting their subsidies for years to come. And I would think that states are promoting advocacy for that very reason. Now, other than subsidies, do you see that states or state-based exchanges will start to strengthen certain policies around their plan designs or members based on any results from the election for specific conditions of coverage, new programmatic requirements for issuers, or even new requirements that could impact Citizen or Softheon?
Well, I would think that that actually ties into something that not this most recently released regulation and notice of benefit and payment parameters, but the one right before it went into, which was establishing or working toward establishing or evaluating whether CMS should more closely regulate the ways that states operate their exchanges, the states that have decided to build their own healthcare exchanges, whether CMS should have more of a hand in that. And that goes not just to, the plan design certification, but also to review for network adequacy and these sorts of rules, whether these should be set up at the federal level or not. And, that sort of progress towards those sorts of things could either continue under a Harris administration, or could be pulled back and reversed very significantly under a Trump administration, as we saw when it pivoted from the Obama administration to the first Trump administration in 2017, in the first regulatory notice, the same regulatory notice that was issued that year. Yeah, I think there could be a lot of different changes that will affect both state regulators as well as issuers, and the people who are designing plans and figuring out how much they cost. So I guess the other thing to your other point, and maybe we can talk about this a bit more, but the really looming on the horizon issue for everyone here is whether or not the American Rescue Plan subsidies passed in 2021 get extended in some way, shape, or form, or whether they get are allowed to expire, because before 2021, people above 400%, 4 times of the poverty level, didn't get any help on the marketplace, and people below that level didn't get as much help. And that changed, and that's set to expire. It's been extended once. It's set to expire. And I think people I've talked to on both the right and left agree that enrollment, as you just kind of alluded to, enrollment in the markets will return probably to 2020, 2019 levels, if that happens, and depending on how that happens, obviously affecting all sorts of stakes.
Yeah, and you bring up a really good point, Josh, because what we know about the traditional ACA member is really, where subsidies come into play is, we're talking about members that we serve that generally work more than one part-time job at a time, who struggle with obtaining transportation to get to the doctor, to actually get the care that they need, and may even question, should I pay my mortgage or car payment this month, or do I pay my health insurance premium? Which subsidies, by reducing that cost burden on the member is life-changing for so many reasons, and to improve healthcare outcomes across the board for everybody in our country. So, I'd be very curious to see how that continues to be extended or even managed through the end of this year. And then, Josh, with respect to membership, so I would say the impact for health plans. If subsidies were to go away, not only would members struggle to afford the care that they need, boomeranging back into conditions that we've all tried to solve over the past number of years, but what would that mean for the issuer and payer space, the actual health plans that serve the members today, that create the plans, that furnish the plans, that actually work to produce enrollment and billing with Softheon? Do you have any thoughts on maybe the broader, environment of insurance companies and what that would mean?
Well, I think that in any regulatory or market-related environment, there are always going to be opportunities, even when there are changes that might initially be perceived as disadvantageous. For example, a decrease in enrollment in the ACA markets that might be quite significant could be coupled with a rather significant increase in uptick in what we call ICHRA, or Individual Coverage Health Reimbursement Arrangement, which is a way that employers can give their employees a fixed amount of money. Here you go, and then you can go buy a plan on the marketplace instead of the employer setting up, designing, and administering the plan directly. And this would not only increase enrollment in the ACA markets themselves, it would also bring what we call good risk into the markets. Generally healthier people who have, full-time jobs, full-time higher paying jobs. So, that's one aspect. There could be more of a focus on bank account type, transitioning the ACA subsidies into bank account type arrangements and using them to pay copays and this sort of thing, and not just the full premium. That more aligns with some of the Republican type visions for the way these programs should work and should have historically worked. I think that payers should be concerned about a drop in enrollment, but where it's not guaranteed that they will expire. It's not guaranteed that President Trump said something in the debate. I'm not remembering the exact line. The most recent debate with Kamala Harris that indicated that's been interpreted by Republican folks as indicating that he would be open to an extension of the subsidies. So I don't think it's a guarantee. And I think there are new opportunities where there are other disadvantages.
Thank you, Josh. No, that's great too. And I think what it's starting to make me think about is, well, even with the introduction of ICHRA into the marketplace as a product alternative to your traditional, let's say, qualified health plan, I'd be curious to think if there's even like an opportunity for net new products to be created that never existed before outside of ICHRA, to actually, achieve those funding arrangements that you talked about. So that'd be interesting to see if that would actually cause a whole new market appetite for something brand new.
Oh yeah, I mean, especially if there's more flexibility under what's called Section 1332. This is, again, I keep fearing that I'm getting a little too wonky here, but Section 1332 of the ACA allows the marketplaces, the exchanges, the administrators of them in the states to seek waivers of the way that the ACA statute would otherwise function. And that would allow some of these exchanges to sell other products besides just the straight health and dental plans. And so that could also include some of what you're thinking about here. Probably not a California or Michigan or Illinois thing, probably more of a Texas thing. And in fact, it's probably multiple southern states would be interested in some analysis of that.
No, that's interesting too, because generally we see themes starting with certain states and other states adopting those decisions and choices. So I would say, yeah, for anybody listening out there, it's probably going to be very good for you to follow some of these large scale changes. And if you have a team internal to your organization, definitely track it, because I would think you would agree, Josh, staying ahead of some of these changes, outcomes of the election are going to be critically important come 1/1 to be able to implement on those decisions. So, I would encourage everybody just to think about that too. Josh, I know you have extensive political experience and you follow both parties, but if you could just share a little bit more of your thoughts candidly about the Trump administration versus the Biden-Harris administration, and where you think that falls within the discussion of the impact of ACA next year. Would love to hear from you.
Well, it's definitely an interesting topic, and it's very very topical for payers as well as government agencies that administer some of these benefits and programs. I think it can be broken down pretty simply, which is that if any of this can be simple, that the Republican side, the Republican view is more of a focus on reducing gross premiums. So the premiums before any subsidization happens by the government, that is maybe changing the benefits and structure of a plan to make it less expensive, or underlying factors that affect the cost of the plan, cost of medical care and this sort of thing. And then the Democratic side has very aggressively, since 2014 when the ACA went into effect, but then really sort of in the second wave of the ACA around 2018, 2019, worked to aggressively subsidize and then extra subsidize the ACA markets, building in state-based exchanges in several states where they were building subsidies on top of the ACA, and then passing additional legislation that gave more assistance to consumers from the perspective of how much they paid after the assistance was applied. And so those two visions, they sort of serve to focus on perhaps different groups or constituencies a little bit, and they do aim to get potentially different results. But ultimately, both parties share the goal of bringing down the price of healthcare for the key stakeholders.
That is interesting because, so, I mean, that's one thing that they can mutually share, which is great news marching towards that same beat. And it's interesting because when we look at how carriers are filing, some of their rates for plan year 2025 and what that means for 2026, we've even seen carriers start to raise some of their rates to combat some of the expense that happens behind the scenes at the insurance company's expense. So that being said, I would say at least if they can agree on one mutual topic, the cost of care or total cost of care is definitely an important one. Now, looking after year one, providing the results that occur this November, do you think that there's going to be more of a significant impact year one or a gradual impact over the 4 years of term of the president to enter the office?
I think it would be a slow impact. I think it would be a slow impact, and I would also sort of amend what I just said, to add that many Republican politicians and certainly the regulators who work under them have grown to adopt and embrace key aspects of the ACA, including the subsidization of premiums, such that here in Texas, where I live, they passed a bill I believe went through the legislature to get it done, called premium alignment, that significantly increased the amount of ACA federal subsidies that the state drew down, coming from Washington to policyholders in the state of Texas, and dramatically reduced premiums. So there is a belief by many people on the Republican side, on the health policy side, that this is the way that we've decided to set up the framework for healthcare, and that whether or not Trump wins, whether or not Harris wins, it's more about tinkering around the edges, rather than wholesale dismantling or changing. So kind of weaving that into the answer to your question, I think that changes that we would see if, let's say that pretty likely a Harris administration is going to be status quo, and maybe even, depending on how Congress looks, a slight increase in subsidization if they're able to get it through, at least to continue the status quo. Changes on the other side in terms of attrition of subsidies, I think it could be very slow, but we'll see. I think it depends on the makeup of Congress. It depends on what state someone lives in and the plan is operating in. So it depends on a lot of factors. It's hard to answer for the entire country.
Fair enough. No, and you make some really good points too. And using Texas as an example is a really good state example, because the way we look at that is they're, as a direct enforcement state, generally speaking, some of the FFM markets cede to CS. So the fact that Texas is allowed to increase that premium stabilization or premium offering to members is highly valuable. I would even be curious to learn if members would start to move out of state into new states to find greater access to coverage or more affordable care. Based on that, and we see movement of membership from different books of business for each carrier, even kind of thinking how to track that or how to anticipate serving members in different counties and communities could be very interesting, quite frankly.
It really could be. I mean, I had always wondered if, when the Affordable Care Act was originally passed, and then 2 years later, the Supreme Court said that the expansion of Medicaid to people just above the poverty line was optional, whether people, obviously they're poorer, it's harder to move if you have less money, might still migrate between states to states that had expanded or not. But to be honest, I've met people since I've been in Texas, younger people, youngish people closer to my age, who happen to have Medicaid expansion in a different state, and then they moved here and didn't get it. So I'm not so sure that the cost of insurance, unless you have a serious health condition, is going to be the governing factor for where you want to live.
Good point. And it's interesting because we did see, I mean, to tie it back even to the notice of benefit payment parameters, even folks with chronic conditions or pre-existing conditions, could be in a very interesting scenario, to your point. Now, let me ask you a question. So when we talk about the individual shopping on the ACA marketplace and what that means for that individual member, at Citizen and in your role, are you actually looking at impacts or evaluating any type of, I guess, downstream flow of events to small groups under the ACA? So I know we define small group really in like two separate ways. So really lives 1 to 50 in most states, but then in some states like New York or Colorado, small group is defined as 1 to 100. But anything from the group life perspective that you think would be drastically impacted, or more so for the individuals collecting subsidies on the exchange rather than off the exchange or elsewhere?
Well, it's interesting. I think that there is a slow trend. The ACA exchanges did create a group marketplace for the states to have, and that is one of the technologies that we are proud to support at Citizen. There is a trend of more states being interested in supporting that technology. And in the politics and the legislation to look at doing things in the Republican-leaning states, there has often, at least in one case that I'm thinking about, probably two, been kind of an angle like, this could help small businesses, and whether this could help the small business market or there could be a technology to help them. I'm thinking about the legislation specifically that was introduced in Texas, actually, but it's a theme I've heard elsewhere too. I think the biggest impact, though, and the biggest and most immediate impact of any electoral outcome will be for purchasers in the individual market, or people for whom they're in a group plan now, but under new regulations, they're going into the individual market through ICHRA, as we talked about earlier. So.
Very nice. No, that's good, and all good points too. I'm curious to see where that goes and from enrollment, because we do know, at least the markets we serve, when we look at it, small group is definitely the minority from the overall ACA membership and population. So we'll have to stay tuned for that. Yeah, and Josh, I think at this point, I think it's been a great discussion so far. This is actually really fun. And I'll just say, it's hard to find like-minded individuals like yourself who actually get enjoyment out of, talking about these topics. So just in general, what else is Citizen seeing leading up to November, leading up to this election that we should be aware about? Anything, you personally think is important just to call out, or anything that Citizen believes, marketplaces should be looking out for? Because as a leading supplier, I think, people will look to you guys for some of that cursory support and possibly guidance as well.
I think that a couple of themes or areas will increase in use and in importance regardless of who wins the election. One is enhanced direct enrollment, EDE, where over half, it might be close to 60% of enrollments through healthcare.gov of people who sign up for insurance come through a third party through the EDE technology that we were one of the leading partners with CMS to implement ourselves. And a lot of clients that they think it's simpler, easier, connects them to the insurer more directly. We've talked about ICHRA again. I think that will its time will come. Right, so far the signups through ICHRA aren't that huge, but it's growing year over year, and it will come whether or not it's Harris or Trump, especially if it's Trump, I would think. But it's more based on the dynamics of a state's market and federal dynamics, I would think. I would also look toward state responses to whether or not the ARP subsidies don't get extended. So like a bunch of states before the ARP, the additional subsidies that people could get that really made the ACA so much more financially good looking to a lot of enrollees. If that doesn't get extended past the end of next year, there's a lot of states that have subsidies, could create them. They need a state-based exchange. The subsidies might look different depending on the political construct of the state. So those are some things that are on the horizon, both leading up to the election and a little bit after the election.
Yeah, that's something to think about too. And while we're on that topic, so let me ask you, so as it relates to state advocacy and the implementation of subsidies, do you feel that health plan associations or state associations will have a lot of influence over those decisions? For example, we work with a number of associations that bring marketplaces together, such as ACAP or California Association of Health Plans, or even Massachusetts Association of Health Plans. What's your take on those association groups and their involvement with marketplaces and also plans?
I think they play a really critical role because they know so many of the stakeholders, and they know the way things work on the ground, as well as the people to talk to, and for a smaller insurer who might not have as much of a lobbying budget, could serve as a gateway to advocate for those things when they can't do it directly. So I would say that trade associations would have a big impact. It would also obviously depend on the individual functions of a state, how the politics and everything work in a particular state, because it's going to be different from one to the next.
Great. Now I'll ask a moonshot question here too, and if you need a minute to answer, let me know. But I have to ask, do you think there's ever a scenario in our lifetime, per se, where all states would become a state-based exchange or marketplace, where there is no federal exchange any longer, where they adopt those practices? I can't say there would be, but I'd just be curious for your thoughts based on tying it back to the parties of the Democratic side versus the Republican side. Do you think that's even possible?
There are certain states that are so small in terms of the number of people enrolled in the health plans, that it's much cheaper, less expensive. Cheap is not the right word when you're talking about the cost of healthcare.gov, but less expensive to use healthcare.gov than to build your own or implement your own exchange, no matter how you look at it. So the framework would have to shift, and it is possible that under a Republican administration, they could emphasize EDE, which we've spoken about, more, and reduce the emphasis on the full-scale healthcare.gov, at which point the cost balance calculation might change for some of those states. But a state, I'm just trying to think of what's the smallest state. They're probably not going to do it, but I could see a situation where most, 85% or more do, and then the role of healthcare.gov gets scaled back.
Gotcha. And that's really interesting to hear, because I would agree. I mean, that makes sense too over time, and over the next, let's say, decade or even 2 decades, probably, that slow change. And when we think about, I guess, state-based marketplaces, you bring up a good point on fees and expenses. It's not cheap to implement the capabilities that the state's exchange has. Enrollment and billing, that's a big part of what Softheon and Citizen deal with. And even in terms of call center stability and service operations, those types of items that you need to either build or you need to buy, or scale that business up. When we think about user fees, I believe, and not sure how close you are to this, but isn't it anywhere between 1.5 or 2.5% of admin fees is what gets paid to the state exchange by the payers? So I think, 1.5% of membership premiums, for a small state, you're right, isn't a ton of money, but for a larger state's exchange multiplied by millions of members, that it's a flow of funds that goes, that's through the 830, or sorry, the 820 files that go back and forth from the payers through Softheon. Any thoughts on user fees, I guess, would be the question, in terms of, as we see potential themes in states becoming SBEs over the next number of years, over the next decade, do you see user fees going up, where payers could be starting to be charged more based on those 820 file payments? And to what degree should that be, I guess you could say, limited to some degree?
I definitely think that the user fee could go up, and the reason that it could go up is because it's already too high, and it's, in my opinion, and it's already supporting things that states should get to choose whether or not they want. My information says it's 2.2% this year, but it's very high. Some states pay hundreds of millions. Through the carriers, pay hundreds of millions of dollars a year to use it, and maybe double what it would cost to run their own marketplace. The situation where it could go up is if the bigger states that are using it currently leave. And then Texas peels off, Florida peels off. All of a sudden, they've got all these little states, but they've got a gigantic contract with a couple of systems integrators and a very expensive, or 3 call center and mail vendors, and they have to pay them. And so either they subsidize it from the general revenue, which they have to kind of write in an exception to the rule to do, I think, because they used to do that in the early days. Or they charge the actual fee, and that would go to the remaining states, and the price would keep going up. So that's the situation that could happen.
Yeah, and that could be, favorable for the smaller states, but unfavorable for the larger states. But that's
right.
That's a really good assessment. And I mean, to that degree, I'd be curious to see, the future of that and what that would mean in terms of implications to plan designs or the actual member, the flow downstream to the member. Well, Josh, this is a great discussion, and really appreciate your time having you on the show today. Just wanted to give you one final opportunity. Any last thoughts you wanted to share with us, or for the listeners out there, of what they should be looking out for with the upcoming election this November, or those outcomes?
Well, I would just say that there's a lot of moving parts about how things could play out and evolve in multiple different states, but some of the key trends and themes in this sphere aren't going to be changing. They're going to continue whether or not either candidate wins, including the shift to state-based exchanges, embracing the insurance markets, ICRA, and various other kind of state initiatives. It's just the dynamic of how that all works out, the amount of premium assistance that people get, and a few other factors that could change, but the overall structure is going to stay the same.
Well, with that being said, well, at least we know a little bit of what to expect next year, and look forward to working with Citizen and following everything that you're doing and the work that you're doing to help the state-based exchanges. That being said, thank you everybody for queuing in. Give us a like, give us a share, and we'll see you all next time.